Hey everybody, this is Ryan Mowry with a stock market bubble update for you guys. Now, it was a wild and crazy week. We had Bitcoin go over $50,000. Should you be buying Bitcoin? Should I be buying Bitcoin? Should you be buying or should you be selling Bitcoin? We're going to get into all of that and more. Plus, we're going to get into the S&P 500, the Nasdaq, and the Russell in this video. The indices across the board finished lower. The S&P 500 down 0.7%. You had the Russell, it was down 0.9%. And you had the Nasdaq, which led the whole way lower at 1.6% lower. We had congressional hearings this week about the Gamestop fiasco back in January, where it went up to $483 a share. We had guys like Roaring Kitty testifying and dropping meme lines from Wall Street Bets in front of Congress. Now, he may be up in his position again in GameStop, and he may tell you that he likes the stock. But you want to make sure that you're not getting caught up in the war that he's trying to fight at this time. GameStop had its run, but rarely does it make that kind of a run 2 times in a row. So take a step back, breathe a little bit, and if you made money off of GameStop, that's great. Move on to the next trade. His fight doesn't need to be your fight, and your portfolio doesn't need you falling on its sword in order to back him up. There's this huge expression out there right now about having diamond hands, about never selling no matter what. If it goes all the way down to 0, you got diamond hands, you don't sell. That's the worst advice you could ever have. If there's one thing that I've always preached on this channel, it is about managing the risk. It's about using stop losses and about planning your trade before you ever get into the trade. And you have to do that with every trade that you make. So having a diamond hand, that doesn't hurt anybody except you in the end. 1 in a million stocks will do what GME just did. And if you try to go chasing that with every trade that you make and you got to have those diamond hands, you'd be far better off having paper hands instead. But I'm just telling you, have neither. Just plan out your trade, manage the risk, and know where you're going to get out at if this trade goes against you. You got financials at all-time highs. You've got industrials. They're popping. Energy, they're trying to pop too. But you got technology really lagging here for the whole month, really, against the rest of the market. You also have utilities struggling. And healthcare, it's starting to pull back a little bit. So it's important to know when you're trading in the stock market, which sectors are rallying, which sectors are not. Right now, I'm really light on tech stocks, while some of my longest holdings have been in financial stocks like Bank of America. Before I get into my charts here with SPY and with Bitcoin and the others, I want to tell you real quick about the YouTube membership channel here. This is really an awesome experience for you to get involved with. Each week, when you sign up, you're going to get my market analysis on each of the indices. That's the S&P 500, the Nasdaq, and the Russell 2000 twice each week. On top of that, I'm going to update you on all the FANG stocks, including Tesla and Microsoft. And you're going to get my master watch lists updated for the stocks I'm most bullish in and for the stocks that I'm the most bearish in. Also, my daily setups from those watch lists each and every single day, as well as the most intriguing charts that I come across in the stock market. So check that out, hit the join button below, and get started. Now, first off, we need to look at the SPY chart here. We have the bearish wedge in full effect. Again, we broke out of it last week. We're back in it this week, just barely, but it's worth noting because what that says is if we have follow through to the downside again this coming week, that means last week was just a head fake. It was enough to sucker in a lot of longs before it pulled the rug and drifted lower again. So that's going to be key for the SPY going forward. And if it continues to drift higher, will it touch the rising trend line off of the March lows? You take the biggest company in the stock market right now, Apple. It tested its rising trend line this past week. And guess what it did? It broke below it. No! So there's no guarantees here that the stock market can hold the rising trend line off of the March lows right now if stocks like Apple are already breaking it. And just like I've been doing in a lot of the previous videos, I've been highlighting this channel on the 1 hour chart of SPY. It's still in it, but it continues to hit its head up against the upper band. And it did it again this week here too. Continues to hit it, and now it's starting to drift a little bit lower. If you zoom in a little bit further, guess what you have? You have a head and shoulders pattern in full effect. This head and shoulders pattern has a neckline that has been perfectly formed. If it breaks below 387.50, the head and shoulders pattern is confirmed. Now, the problem with head and shoulders patterns in this particular market, I would probably almost say for about 10 years now, they have created some incredible bounce plays for the market as a whole, even for individual stocks, that when it finally tests this neckline, instead of breaking through it or even holding a break through it, it all of a sudden finds this incredible amount of buying power and it surges to new all-time highs. So you want to watch out for that here, especially with it being the hourly chart, because intraday charts are less dependable than your daily, weekly, or monthly charts. But if the downside does happen on the SPY, how far does it go? Well, you're going to want to watch this gap going all the way back to February 2nd. This thing has not been filled. Most gaps do get filled over time. So you're going to want to see, does this gap get filled at around 377? If that's the intentions of the market, then you have about 3 to 4% of downside going forward in the days and weeks ahead. You also have pretty much the same pattern on the Qs as well. A nice rising channel hasn't been broken yet. Head and shoulders pattern on the 60-minute chart here that is yet to confirm. If it does, the gap fill again from February 2nd comes into play, as well as a potential test of the 200-hour moving average, which you can see it's tested a number of times going back to the beginning of this year, and it has held it each time. If the channel breaks down in the Qs, where could it possibly go? Well, you have the rising trend line off of the March lows. That's going to be back in play here. It's almost perfectly parallel to the 1-hour chart as well. Let's look at the strongest index of them all, the Russell 2000. 20-day moving average still holding. Tested it on Thursday. Held it again, bounced pretty hard, up 2% on Friday. While the S&P 500 and the Nasdaq were both down, so there's a divergence here. You also have a bull flag pattern, highlighted it last week, still playing out as we speak. Now, let's talk about the chart that everyone's talking about. That's Bitcoin. Everybody's wondering, should I buy Bitcoin? Is it too late to get into Bitcoin? Is it going to $100,000? Who knows? It's parabolic at this point. But one thing that I'm kind of finding that's a little bit concerning, notice all the volume going back to March and April of last year. There was a lot of volume pouring in, and it was relatively flat. It wasn't really moving that much. That was where there was a lot of accumulation going on. Now that it has started to rally, what do I notice? Well, since the beginning of 2021, the volume has fallen off. It continues to get less and less and less. So as the stock is getting higher, there's less and less people interested in buying it, actually. So the volume's going down. And typically when you get these parabolic rises, there's a lot more interest than what you're seeing in Bitcoin right now. The volume literally is falling. That means going forward, there may not be as much buying power to hold up the current rally. So if you're looking to get into it, wait for a pullback. Well, where do you get in at? Well, you got to be patient. Everything about the stock market says you have to be patient. It doesn't matter if it's Bitcoin, Apple, Gamestop, anything. You have to be patient. That patience will sometimes keep you from getting into a stock or into a crypto that has gone up too far too fast. It will also provide you eventually the best possible entry price, and at prices that you never thought was achievable. But over time, going all the way back to September, the trend lines continue to get steeper and steeper and steeper to where now we're literally dealing with a chart that's parabolic. Now, if you're looking for a pullback, you got to decide which trend line is going to work for me. If I'm going to eventually get into this, which trend line would I target? For me, it would probably be the most conservative one. I would want to work off of that one going back to September, because usually those are eventually retested. So here's the deal. I often talk about how we are in a stock market bubble, hence the name of this video. Well, when that bubble bursts, what do you think is going to happen? The stocks are going to come crashing down, right? But what's going to happen to the US dollar? The US dollar is going to go up. It always does. And right now, the US dollar is at incredible lows, and you may actually be seeing a basing pattern here going on at these lows. If that thing starts to creep up, it's going to put pressure on the price of Bitcoin, because in general, as the US dollar has been going down, Bitcoin has been going straight up. And I'm pretty sure a lot of people buying Bitcoin right now are not aware of that relationship between the dollar and Bitcoin. Check out at Q4 when the stock market fell, what did the US dollar do? It rallied from October to December, it rallied. Even more so, what did it do during the COVID sell-off back in February and March? It shot straight up. So yes, if the stock market bubble does burst, you can expect Bitcoin to feel a little bit of pressure and start pulling back, and it may do so dramatically considering how parabolic it is right now. In the end, if there's one thing that we've learned about bubbles and parabolic stocks and parabolic cryptos, they all come crashing back down to some more reasonable level. We saw it with crypto. We saw it with Bitcoin before. When it reached 19,000, it came all the way back down to 3,000. Does that necessarily mean that Bitcoin will come back down to 3,000 again? Possibly not, but there will be a reckoning and there will be a strong pullback, and there's going to be a lot of bag holders. What I don't want you to be is one of those bag holders. I want you to be booking profits along the way if you're still in it, and making sure that you're being careful with how you manage the profits and the risk. Just like we saw in GameStop, just like we saw in AMC, just like we've seen in Kodak and Hertz and all these other stocks. They hit these bubbles and then they have a huge and sharp correction, and it doesn't warn anybody. It comes like a thief in the night. So if you enjoyed this video, I'd encourage you to like and subscribe. By doing both, it helps me continue to grow this channel and provide you with some excellent content. Let me know down in the comments below, what are you doing with Bitcoin? Are you long in it? How much do you got? I want to hear all about that and more. Thank you guys, and God bless.